Hey all, welcome back to the channel, Fully Invested Fi. Just wanted to give a quick portfolio update today to see where we're at after this week. There's a couple of moves that I made this week that I thought were worth sharing out because some of it was actually inspired by some of the comments and back and forths that I had this week. And yeah, it was stuff that I was thinking about already, so that kind of just gave me the extra little push to actually pull the trigger on those. Just to recap for those that are new to the channel, over here, I'm living outside of my Robinhood brokerage account. I'm paying bills out of it, as you saw in the previous video this week. I'm basically treating my account like a bank. I'm investing my full paycheck every month. 40% goes to growth and dividend growth stocks to help kind of keep the portfolio appreciating in the background, and 60% of it goes to high yield income ETFs, and that helps build up the monthly income and dividends rapidly. I leverage margin to basically make up the difference between my monthly expenses and my monthly dividends right now, which is currently lower than my monthly expenses. And then I basically borrow against my assets and stocks, never selling anything to bridge the gap temporarily until the snowballing effect takes place through this aggressive investment and basically surpasses the monthly expenses that I have. So yeah, with all that, I'm targeting 5 by 40. So very aggressive given that I'm 35, so 5 years. And yeah, I'll hope you'll follow along the journey, which I'm going to try to be transparent about as much as possible. So yeah, as a quick disclaimer, as always, none of this is financial advice. It's for really entertainment purposes only. You'll see whether I succeed or not, fall flat or fall flat in my face. You do your own research. It's a very high risk strategy that I'm running given the margin, and I wouldn't recommend this for most people. So yeah, let's just dive in. Yeah, so this is the state of the portfolio after this week. Just over 131K. This is where my margin is at, still in the low risk category, and there's some updates on this actually too that we'll dive in. And yeah, just to be fully transparent, I didn't do good against the market this week. I just eked out a very small gain of 0.06%. If we compare it against VU, like VU was up 1% this week, and yeah, I did not beat that at all. One reason for that was my margin interest actually got deducted this week, which just comes straight out the just gets added to the margin, and that gets added to the overall gains there. So yeah, the dividends, even with the margin, didn't quite make that up. So unfortunate, but that's the reality of the strategy. Some weeks you'll overperform like last week more than 2 or 3 times, and this week I didn't. But yeah, if we drop into Snowball Analytics here, you can kind of see how stuff is shaking out as far as like the splits between everything. But overall, like if I check the 7 to 6 month a year to date, still beating the S&P. Here it's not quite accurate for the 7-day because it didn't bring in the margin interest I got paid yet. So here it looks like a gain, but it's not over the S&P. But yeah, over the 1 month, I'm still beating it just by 3%. By 13% over the 3 months, 17K for the 6 months, and year to date still beating it. So yeah, may not beat it this week, but overall still up, which is great. As far as where my monthly income is, this is what it looks like on the dividend calendar. So now I'm at 4,700, a little over 4,700 monthly. So slightly lower than it was last week. Of course, like as a payout shift, like this will change since the Snowball Analytics people basically just do it based on the last payout and project out. So yeah, that goes a little bit lower, but you can kind of see what's coming for the next few months. And yeah, if we pop over to Monarch, you can kind of see the dividends that came in this week. And yeah, we're just under 4,000 here. But I think, yeah, I fully expect to beat our last July thing. So you can kind of see the progress of the monthly dividends coming in. And if we switch over to my sheet, so this one is a little bit more enthusiastic as a projection because I just do it based on the average monthly dividend payments year to date, essentially. So this comes up a little bit higher. So last week we were at like 5,400 for this, I believe. And then now we're at 5,700 monthly. Yeah, I'll have to see what shakes out better, like in terms of like looking at this or Snowball for the monthly dividend. But for now, in my videos and on thumbnails and stuff, I'm just using the more conservative one, just to be a bit more fair there rather than the aggressive one. So yeah, that's for the monthly dividend. So yeah, like a couple things that I want to talk about as far as portfolio updates. Yeah, one great piece of comment that I was kind of consistently getting from several people was to just have a bit more of like insurance and hedge in the portfolio. And yes, I was already kind of thinking about this for a while, but I was just kind of like just hadn't researched it enough to really kind of pull the trigger on it. But you can kind of see it here. So here I'm gonna start doing some monthly put insurance through puts on SPY and QQQ, basically at like 10 and 20% out of the money for both. So that should help cushion things, and for not too much of a monthly burden, like just under $300. Like if I scroll back down here, where is yeah, here they are. So these are all the buys here. So yeah, just for under $300 a month, basically buying insurance for like if there is like a major correction of 10-20% in a month, I'll be cushioned by that. And yeah, these puts right now are down this week because the market went up. But if the market had gotten shot down for whatever reason, these would help cushion the blow, which would help a lot. And yeah, this was like definitely inspired by Patrick's portfolio. I'll link the video in a box here and in the description. But he does. I won't even go and do an overview because he does such a great job. So definitely check out his video going over how to run that strategy. But yeah, finally did that, and that'll be nice just to help cushion things, given that like I have quite a bit of margin and just want that extra protection, right? And then yeah, some other things that I did in the portfolio as well was actually do a couple of fund swaps and condensing, and yeah, just to help manage the risk in the portfolio, and then also hopefully keep some of the payments more consistent. So can kind of go over that if we switch back. So you'll notice here that I had YMAG previously, and I basically sold out of that to switch it out for YMAX. So which I already had like a smaller portion in. But yeah, the idea behind that was to I've been watching YMAX for a little bit for the last several months, and I've found the payments a little bit more consistent, and it's actually done much better than YMAG year to date, and just a lot more diversity given that it holds all their single stock funds. So yeah, that just kind of condenses it all into one, and I'm not switching between like YMAG and YMAX for investments. And also, I sold out of BITO and swapped that for BTCI. And the big reason for that was actually for the margin maintenance ratio. So, what's it called? BTCI actually has had better performance than BITO since the beginning of the year. NEOS is a great fund. I'll actually probably invest in SPY QQQI shortly too, as just like some of the safer high yield plays here. But yeah, this was the first step for at least on the Bitcoin side. So yeah, BITO for BTCI, and yeah, that's nice because like its margin maintenance was actually a lot lower than BITO. So yeah, if you go there, it's actually 25%, and BITO was actually 40%. So that gives it basically unlocks more buffer here. So yeah, this is the buffer you want to keep an eye on. So like I might have like almost as much margin as the equity in my portfolio, but because of my margin maintenance ratios, my buffer is actually really healthy. So the market would have to have like a 50% 66K correction on my net portfolio to actually hit the margin call, which is quite a bit. So yeah, that's the big plays there. On the retirement side too, I had BITO in my Roth IRA, and yeah, for the same reasons I just swapped that to BTCI instead. And yeah, for those that were worried that I wasn't contributing to my retirement stuff, don't worry. Like you can see here that I have like basically my rollover 401k, my Roth IRA, and that's growing. And I'll have like a whole separate video for that eventually, just to go over my two-prong approach to retirement. So there's the early retirement stuff that I'm doing now through this the taxable brokerage, and then there's also just the traditional accounts there that are in much safer funds, and that are just in you can see here SCHD, VGT, very simple. And yeah, I'll explain the reasoning for that and get into that in a later video. But that's there. And yeah, and then another big update that I didn't expect this week, which was a fun one, was my margin maintenance got updated on Fidelity, which was great. Or Fidelity. Still use Fidelity. They're on Robinhood. So if we go to the margin section here, so you'll notice that this is actually a lot higher this week. So last week I was at like roughly 45% buffer, but now it's jumped up to 50%. So yeah, the market just has to drop a lot more for me to hit a margin call, which is nice. So it just gives me a lot more safety and de-risking. So you'll see here, if you look at my maintenance ratios, is that, yeah, Misty used to be at 70%, ULTY used to be at 40%. Some of these single stocks for Hood and Reddit used to be at like 35, 40%. And now most of my portfolio is 25% now, which is great. That's the lowest you can get on Robinhood. And Misty's even 35%, which is like way better than 70 used to be. So yeah, that makes it so that like you have to hit these numbers, but cumulatively that's the 66K to be before you hit a margin call. So that helps a lot, and that's what kind of really helps de-risk things. So like to recap on that, yeah, it got automatically updated, and I don't know if that was like a reaction to some of like the moves I did earlier this week, as far as like changing out BITO for BTCI and things like that. But yeah, that, and or maybe this was like a global thing. I don't know if you guys tell me in the comments if you saw your margin maintenance update this week. But yeah, so like Misty went from 70 to 35%, Hood went from 35 to 25, Reddit 40 to 25, ULTY 40 to 25, NVDY 30 to 25. So that was like a huge change. It was a nice surprise. So that basically brought my buffer from 58K to 66K. So this is how much the market would have to drop in my portfolio for margin call hit. And then my margin maintenance basically went from 28% to 25.5. So which is a huge jump. And considering like on Fidelity, I was at like 32% at one point with the blended ratio. So yeah, my margin buffer went from 45% to 50%, or just under 51%. And yeah, that makes a huge change, honestly. So that was very happy to see that. Christmas came early on the portfolio. And yeah, that's the update pretty much. Yeah, so one thing, and also the dividends came in, of course, last but not least. Yeah, you can kind of see those over here. If we switch over to dividends. Yeah, so ULTY came in, NVDY, YMAX, Costco, Apple, all the stuff that's on the growth side of things. So anything that's like in my growth anchor stocks and ETFs, those get dripped and reinvested. And then anything in the high yield stocks, those get just dropped straight into the portfolio. So it lowers the margin balance every week. And yeah, so yeah, total that brings up the dividends to 1,645 and 63 cents, which was a nice week, more than last week. And yeah, that's the portfolio update. Yeah, one quick thing here as far as the gains and losses per the funds here on the sheet. One thing worth noting. So here I have the split between total return and just normal returns without factoring the dividends. So yeah, there's a lot of talk about like NAV erosion and things like that, but honestly, like I've been really happy with the high yield funds. You can kind of see it here. So from like 12 to 18 here, that's all the high yield funds. You'll notice that, yes, they're on the red if you don't factor in the dividends, but once you factor in the dividends, this is all green. Yeah, so you can kind of see here that like the gains, the total return for everything is actually all in the green. The only thing that's like red is basically stuff that I had just invested in recently in the recent weeks. So haven't had too many distributions yet. So ULTY, but I fully expect us to be in the green over the next couple weeks, months. So yeah, I have a gain of like 55,000 overall between all of those. And you'll notice too that some funds like have like abnormally high ones, like XPay, for example, or even like BTCI, even though I just switched this. And that's because I swapped from BITO to BTCI, I just kind of carried over any of the returns from that, just to kind of keep tracking that. And for XPay, that was like a long history of like from going to BST to CRF and then now XPay. So just kind of that same money being carried over. So wanted to keep that tracked essentially. But yeah, that's the portfolio update this week. Yeah, a lot of moves, a lot of surprises, and yeah, I will catch you next week. Do all the usual stuff, like, subscribe, And yeah, I'll catch you in the comments. I've been really enjoying going back and forth with everyone there and try to answer everything for now, as while the channel is still small. So yeah, we'll still keep doing that, and I will catch you next week for maybe another portfolio update, or yeah, but maybe another video idea that I've been kind of mulling around. Have a long list based on a lot of our comments and back and forths and just random ideas I've had. So we'll catch you next week, and hope you have a good rest of the weekend.